The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition. First Friday of the new year, 2014. Friday the 3rd. So, thank you to Steve Rhodes kicking us off right at 9 o'clock this morning, as he always does. And then, of course, Friday is the day that you get Tom and Daryl together. Wow, that was really a terrific show, going through different things, especially the crude oil contract and how to trade it. Fabulous. That crude oil just looks so weak right now. Let me just see one little thing here. Let me go to the 120. I want to look at the SCO because there is a little bit of support right there. So that'll be peak A, B, C, D, E. E in the SCO, which is the ProShares Ultra Share Dow Jones AIG Crude. That's the inverse. So I'm looking at a little bit of support, and 33.95 will be the key number to watch on the SCO. Now, let's just run numbers. Today being Friday, end of the week, I think I'll just go through everything steadily. Let's just do that. We've got the E-minis right now up 375, having gone from the low of 1820.50, I believe it was. 1820, yep, 1820.50. Let me type that in. 1820.50. And a very nice move from 1820 to 18 is a 10-point move after a big smash to the downside yesterday, way deeper than I anticipated. I said that there should be a pullback, but I should have said there could be a cumulative pullback. Essentially what I told subscribers this morning, that turned out to be a 2-in-1 reversal. Now, would the most appropriate thing have been to go long or to go short? Well, yesterday I'd spoken about in my opening call, it's my daily service, that we were looking towards buying the SDOW 300% short the Dow, lost that opportunity, and in fact what we did is we went long this morning. I thought about it, I did all the analysis overnight, early this morning. I took out the short side, put in the long side, was about to erase the long side. I said, come on, don't do that. Every time you've done the analysis, it turns out to be good. Every time you change it, you kick yourself for doing that. Stay with it. What's your risk? Your risk is 60 cents, and the potential gain is between $1.20 and $2.20 if it works out. So I'm looking at this and I'm saying after all the work, even though it's only a peak C in the 120-minute chart of the volatility index, there was enough evidence that yesterday was a bit of an aberration or a cumulative force to the downside, number one. And number two, when I was looking at the portfolio that we have, which is consisting only of longs at this particular point, and they were doing so well, I said to myself, surely isn't this telling you something? That there's a rotation going on? And that as long as you've got a couple of bank stocks that are doing very nicely, and you've got a USX still showing strength and an Alcoa showing strength, stay with the long side. Let the market take you out. Let it tell you by its price action that you were wrong. So that's our stance at this particular point. Now let's get back to our story. So the E-minis is saying we're at peak C at 1846.50. We've held twice now. Days young, anything can happen. But we've held the 9-period moving average at 1826 quite nicely. We're at 1831. I'm looking at the stochastic at 89%. That's still good, even though it's turning down. And the MACD is still very good, even though the fast-moving average is turning down. And the 120-minute chart says, hey, this is a very nice move. This is showing strength, not weakness, at this particular point. A close on any one-bar basis in the 120-minute chart below 1826 changes the scenario, I believe. So 1825. Sorry, 1825. So let's go on. We've got the Dow, INDU, the Dow Industrials, which are trading up 63 at 16,504. I've got a potential alternate count, but I'm sticking with the one that I've been with right up until now and calling this a peak C that was made yesterday. And the MACD is very strong. Stochastics at 93%. I'd be hard-pressed at 93% unless there were other indications that were going on to say that this is the top right here. I did get a peak F in the 120-minute chart of the Dow, and I've got to respect that. Well, there was certainly a sharp pullback, 160 points intraday. How much was it? It went from 16,588 to the low of yesterday, which was 16,416. So hey, that is that's a pretty big move. That's a 200-point move. That's, you can't ignore that. But look at the nice rebound. Look at the fact that you're nicely over the 9-period moving average. Look at the way the stochastic has reversed sharply. Look at the way the MACD is trying to flatten out. I think we're okay. Just really quickly in the Dan, Mitch has a question. He says, I think natural gas is down. Look at this. This is very interesting. UNG made a peak F doji top of 22.19. Intraday went all the way down from 20 to 19 a few days ago, about a week or so ago, to the low today of 20.48. And now it's trying to reverse to the 120-minute chart. Whoops, that's the wrong one. 120-minute chart is saying, if I can find it right there, that candle is actually a very nice candle at trough D, and it's saying, okay, something's happening in natural gas, NG H14, let's go to. And it's trying to find a base. It's trying to find some support here. Went down to the 419 area. And I've been talking about the 420, 410 area. So we're going to be watching this really closely because, in fact, the 120-minute chart has got a nice A. Oh, very strong leg. A to the upside. It needs to break above 428. It needs to break above 430. This is the March contract. I don't know what people are trading. This is what I'm looking at. Let's go back to our story. SPX.X. S&P didn't finish that. So that's peak C, peak D, peak EF. Okay, everything's in sync. Peak D gets a down arrow. Peak E and then peak F. So, peak F. So that gets a down arrow. Why? Because the stochastic and the MACD turn down together with the price under the 9-period moving average. Goes to E. And then it gives a little inverted V-shaped pattern, the carrot at the top, pulls back sharply. Now the S&P is lagging a little bit. S&P needs to break above. It's at 1835, up 361. Really is lagging. The Dow is leading. That's one of the reasons why I wanted to go along the Dow. The S&P by the end of the day should not break 1833 to 1831 key support. It needs, in fact, to climb to the 1837 to 38 area. I'd be very comfortable with that. Now let's go to the Qs because they made, as we went yesterday, went to a peak E. Nice pullback for the after a peak E. You expect a pullback. You're getting that. The Qs are at 86.94, down 33 cents. Now this is going to be very interesting. Why? Because the stochastic is still at 89%. MACD has just turned negative, and the 120-minute chart has gone to an E. Is that correct? Let me just double check. I don't want to do anything in haste. 79.81. That's what I needed to see. So that is an E. That gets the down arrow. And then there's an aberration and it goes to an F. Double check, always double check. I'm beginning to see the white background very clearly. 87.90, 87.93. I thought so. So that's F. And then a very unusual G. Sharp pullback. So the Nasdaq remains quite weak, one of the weaker of the indices, and it is trading now at 86.95. So I probably have gotten a little ahead of myself, thinking the Dow could bounce this strongly. So far, actually, it's quite impressive. But the weight of the other indexes might be seeing it falter. Let's quickly go to the IWM, peak D at the top there, that's at 115.97, 115.97, 115. 138.97. And what we've got is peak C1, peak C2 in the 120-minute chart. Nice bounce today, holding the 9-period moving average. Good action. Let's just quickly run through the GLD. Well, let's go to the gold. Gold is, in fact, I got a couple opinions about gold. Gold's acting very nicely. It's up 11 because it 120-minute chart is retesting the previous high. The most important thing for me is the arch formation that retested the 28th of June weekly chart, 1187.90 low. It went down to 11. I forgot to put that in 1180. I think it was 1180 or 81. 1181.40. Put that in. 1181.40. And that is very important. So that says you can rally. And you can rally first to the left side, most important peak, that is peak at 1267.50. If you take that out, then the very important level to watch will be 1362.30. One step at a time. We haven't yet closed above the 9-period moving average in the weekly chart, and that would be at 1244. And we'll see what happens by the end of the day. Very unusual action for a Friday to see such a nice move. So we're going to be watching this closely. So that's gold up 1040. You've got silver. Let me just go quickly to the SIJ for 1 second. I don't know if we're trading J. I don't know why I did that. This is F. Okay, that's the January contract of silver. Up very nicely. No, it's down just a tad. No, that can't be right. SLV. Let's go to the SLV. SLV is up nicely. It's up 18 cents at 19.41. Let's go to the bonds. The TLT is trading right now at 101.88. You see, this is the same arch pattern. Will bonds be able to rally if next week we start a slide in the Dow? Dow's now only up 33. S&P is up $1.53. I still see some internal strength. We'll watch this closely. Question, Basil, is the 120 IM? Yeah, let me show you that again because it's the question of the day, and then we'll go to our callers. The IWM is trading at 114.43. That's, so far, it's an aberration because it has not fulfilled the upside potential of peak D. So I'm looking at this and I'm saying, okay, give it a little more time, maybe into Monday or Tuesday. I can just tell you this, if the IWM, the Russell 2000 ETF, takes out 113.64 on the downside, it's all over for at least the short term. Watch out. If, in fact, by the end of the day or by Monday, it's able to climb into it's 114.46, into the 114.10 area or higher, that's going to be very encouraging. Let's see. I think we've got those questions. Basil, the stochastic at 93% will have to come down at some point. Do we look to the Chapman count to tell us, or is it just impossible to get every move correctly? And one just has to wait until stochastic breaks 80% to get definitive confirmation. Well, great question. I'll try to answer that question because today's Technical Friday, but we've got Frank in Lexington, Kentucky on the line, and we'll go to Frank as soon as we finish this break. The Dow's up 39, S&P's up $1.33.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and we've got the Dow 39, S&P's up 2. It's a fascinating market right now. It really is. We've got Frank in Lexington, Kentucky. Hi, Frank. How are you?
Good morning. How are you doing, Basil?
Very well, thank you. Actually, it's beautiful looking out. We're looking at the sun shining on the snow, beautiful white snow. Of course, it'll be all dirty in a couple of days, but right now it looks magnificent. It was a big storm.
I haven't shoveled my driveway yet, but maybe after lunch.
Yeah, I'm not allowed to do it, so we were kind of stuck here, but fortunately I had a neighbor come and do some part of it, and then I had my man come and do it, and everything looks good.
Very good.
So
molybdenum.
So this is molybdenum. GMO is Idaho General Mines, Inc.?
Yeah.
So molybdenum. Okay. So just remind me again, what does it go into? I know that most of us have never heard of it, and then Dave White, our guru here, technical guru at TFNN, brought it up some time ago. Was it Molycorp? I can't remember. Anyway, he brought it up, and wow. It had a spectacular move, and then it came down sharply. So now what we're looking at is a stock, Idaho General Mines, GMO, that's General Mines Operation or whatever it is, trading at $1.39. Do you have a position in this?
No, I don't yet, but I was thinking of buying it here. I'm looking at the monthly chart.
Yes.
It had a little sign of strength in December. Didn't get very high. But it's come down to a bottom. Its bottom in at the end of 2009, beginning of 2010.
Correct.
4 to 74 cents, and it's at $1.39 this morning. I'm thinking maybe this reacts to gold and precious metals and gets pulled along with it.
Yeah, there's a very interesting chart because there's a left side, right side price time match to a certain extent. It did it went to 0.64 after its previous run all the way to 12. Let me check the exact price. It was 12.58 back in December of 2007. That was December of 2010, and it made a low. That's very unusual for it. A low December of 2013. So, okay, let me look at the time lapse over there. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So this is the very opposite of what normally happens. Now, I tell you what I'm looking at. Because it's 0.64 was the low back in March of 2009 when the general market made its low, and it ran to December of 2010 at 725, and the previous low was much lower and much higher. The way that it's held the $1.04 and it's trying to stabilize is saying to me, time has kind of run out on the downside. That's not a guarantee that you're going to get the upside. So now let's look at the weekly chart and say, okay, it went to peak A, B, C, D in the weekly chart. I love when these stocks actually fulfill the Chapman wave methodology and go to Ds, because it tells you that there's a chance that in the next move up, it will do the same thing because it's done it once before, maybe twice before. So you can say patterns repeat, and maybe that pattern will repeat. Most importantly, what I'm looking at is that the move that it's had, in fact, it's not leg A. This is leg B, possibly peak B today in the weekly chart. Good. Okay. All right. Now, this is what I'm going to suggest because of the daily chart. So it's in the leg B, possibly peak B by the end of the day, because it doesn't look like it's going to break above 154. It's trading at 138 right now, though you never can tell. But in the daily chart, the way that it's that big rally, that was, I think that was a day before the real gold rally on the 26th of December. So let me just double check. GLD on the 26th. Yes.
Yeah, you could be right.
Yeah, that was on the 31st. Oh, I think you actually have something here. Not necessarily to say that it's just going to take off, but I think that it's trying to form a base. That's a very important oh, okay, I think I know what I'm looking at. Here are the levels that I'd be looking at. It's at $1.38, and it's made a peak C, and it has this way of just going sideways, and then pop, goes to the upside. I'm going to make the suggestion that if you're interested in this, I wouldn't get too carried away. It's not one of the better looking, let's call it metal stocks right now, but it has the potential to move higher. So I'm going to recommend that at $1.39, you must be prepared that it can go down to $1.33, possibly even $1.30 to $1.28 over the 3 to 5 days coming up. Tell you what, there's a break coming up. Let me just do a little bit of work on the 120-minute chart, and then I'll be ready, because I do like the action. I want to give it to you in steps, and that's the best way to go about it. So hold on. I'll be right back with Frank in Lexington, Kentucky. The Dow's only up 21. S&P just turned negative.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, we're back. Dow's up 25, S&P's unch, and we are on with Frank in Lexington, Kentucky, looking at GMO, Idaho General Mines, Inc., molybdenum. And trading at $1.38, down 4 cents. The more I study this chart, Frank, the more I'm thinking there are two ways to do it. One is at $1.38 to $1.30. That's where I would nibble on it, and not only nibble on it, but if it went to 101.47, in other words, if it broke above the 145 high of 2 days ago, I like that. That's exactly what you want to see, because then it's going to try to make its way towards the peak seat for a leg D above 154.55. I mean, that's my thinking right now. So I'm going to suggest, if you have nothing, if you do not have anything on right now in this particular stock, if you want to just nibble on it here, that's okay. But be prepared that it could pull back over the coming day or two. It's in a little bit of a different category. But if it does pull back, it could quite easily go to $1.33 to $1.30, maybe even just a tad below. I wouldn't want to see it at 128. 130 is pretty much the limit on the downside right here. More importantly, today's Friday, if by Tuesday afternoon at about 2 o'clock, this thing has survived any sideways move, and in fact is starting to strengthen, is at 1.42 or even just a little bit higher. If you haven't got any position at all, you might want to just start nibbling there. But I would be looking at this, that if it broke into the $1.47 area, that's probably where I'm going to feel more comfortable. I'd rather be buying strength in this stock than weakness. And strength says to me that if it breaks 147, there's a real good chance it's going to go to the 155 level for a leg D. So that's kind of how I'd look at it. But to tell you the truth, I wouldn't get too carried away with it right now, because if it's going to build strength, it's going to build strength over the coming 2 to 3 weeks, and it's going to hold above 125, 127 at worst case. Preferably it won't break 130, and if it builds a base on that level, then I can see it going very nicely to 180, even to the 190 area. So slowly but surely, I wouldn't rush. If you want to nibble here, that's just to get your foot in the door. That's okay with me. But somewhere between here, 139 and 133, that's kind of the area that I'd be looking at. More importantly, it's strength that I'd be wanting to add to. But I wouldn't be buying a dip below. If it goes under 127, I'd say be careful. It could give back quite a bit more. I hope that helps you.
Thank you. I had stars in my eyes because on the monthly chart, it has a very high volume swing high at $7.
That was the one going all the way back to the December of 2010. Now, what's interesting is that the way it's come back, come back in trough A, trough B, trough C, trough D, bounces, then goes to E, F, and now a G. Because it's at a 104 and it's taken an extra amount of time, almost a year, 8 months or so extra on the right side, I'd say even a year, and it hasn't broken to 0.64 so far. That's the reason why I agree with you. Good eye, because the monthly is giving you a lot of information that, well, of course, we've just started January, but so far that's nice work. So I like what's happening. As I say, I still would prefer to buy strength only because of that single leg A that we just saw last week that was very strong, and it didn't really have much follow through this week, but it is holding the 9 EMA. No, I feel very comfortable with the analysis I gave, because if it broke under 127, I'd say be very careful. I think you know that as well. So far, it's acting pretty well. Absolutely. That's good local information, and I'll just keep an eye on it. Thank you. Thank you very much for calling, Frank, and have a happy New Year, and thank you so much for calling. So, folks, let's just go through this again. Let's look at the volatility index. And you remember, I've tried to make the volatility index a very key and an important factor in everything that I've done here at TFNN for quite a long time. And in the action that we're seeing right now, the VIX is holding well at 1410. I cannot ignore that. I cannot ignore the fact that you've gotten to a peak C in the 120-minute chart and it's holding the 9 EMA. I factored all of that in to what I was looking at this morning. But at the same time, I said, gee, the stocks that we have acted very well. We even got out of a stock yesterday, and I decided that it was worth, just on a risk-reward basis, to possibly give up the gain that we had to re-enter the same stock. I don't often do that a day later, because I am looking at what I call residual strength. Now, that's very different to internal strength. Internal strength is where I'm looking at all the different factors, and the price is pulled back, but there is every pocket I look at says, hey, there's strength here. Residual strength means that you've used up a great deal of that strength. You're getting towards the end of the move. That's what I'm thinking. But there's just enough, what I would call residual strength, to push the key index, in this case the Dow, and maybe the S&P, a little bit higher. And that's really what I'm looking at. Because if I put everything together, what I'm looking at is, I'm saying, if you're wrong, you're going to know very quickly. You'll know by the end of the day. You'll certainly know by Monday. And if you're wrong, there are so many stocks that you've been looking at that are that are potential shorts that you can get in at any point, because you won't be late. Because if these stocks are going to go down, they're going to go down sharply. If the volatility index is going to go up higher from here, it's going to go up quite high. So I'm looking at this and I'm saying, on a risk-reward basis, my thinking was I would play the chance of going in the Dow, just an extra move, INDU, to try to get, if I'm correct, this isn't a peak F that we're looking at right now, and that's a possibility with an alternate count. I'm looking at more like a peak C at 16,588, made 3 days ago. And in fact, there's just enough residual strength to kind of get everybody to say, oh, man, even 2014 is starting off with a sharp down move, which is a buying opportunity. But in fact, the way I'm looking at the weekly charts, I think we are really close, and it's probably next week sometime that we might be making some kind of a top. Is it worth playing it on the long side, or perhaps attempting to start your shorts at this particular point? Well, it depends on your time frames and what you're looking at. If I'm looking at the portfolio that we have, even the stocks that we've missed buying, because I've put it in every day, and we've just missed by a couple of cents buying the darn things, have acted very, very well. Well, we bought one this morning that pulled back very sharply. That's what I wanted. We got the low of the day. The day is young. There's no such thing as the low of the day until 4 o'clock goes boing, because this thing could still go even lower. But so far it looks like it might be a good entry point. So let's just look at the factors that are very important right now. The NYA.X, that's the very broad New York Stock Exchange, leg E in the weekly. Leg D, possibly a peak D if there's no new high in the entire month of January above 10,406.77. 10,476. Is that what I said? 76? 10,406. Let me type that in. 10,406. So that's the high of last month in the New York Stock Exchange. And that New York Stock Exchange is, in fact, slightly higher, slightly above the all-time high of 10,000. Well, it was above 10,387. So that's very interesting. We snuck above for leg D, and now we are a little bit under. But this is only the second trading day of 2014. So I'm not going to do anything with that. But I'm going to say leg E in the weekly, peak D possibly in the daily. MACD still at 90%. That's good. Oh, here's the question. So the question was, Peaky in the den, who has very good Chapman Wave questions. The stochastic at 93%. Let's go back to the Dow, because I believe that's what he was looking at. INDU. Whoa, big chart went flashing by my screen right here. Let me just make it smaller. There you are. Get rid of that one. Make it smaller. There you are. Okay, don't forget, folks, straight after my show, great show with Nico and Paige. It's all about health. This is just, it's really important. So the question is, two questions. One is the 120-minute chart. Let's just go to the IWM for the moment. IWM, yes. The IWM, the question is, sometimes, doesn't happen often. There is no other wave count that I can use right now. That is peak A, possibly peak B with a flat base restart right there, with the double top, parallel double tops. So it could be C. So this could have turned out to be peak C1 at 150.97, and then peak C2 at 115.74, and peak C3 at 115.71. That's a possibility, and then you get a plus sign for the down arrow because everything turned down. So I'm going to be watching the IWM. So it's possible that the technicals gave a way better indication than the actual letters. So that covers that one. Now the next one is, it is very unusual to be way up in the 93% area, but look how quickly you can slide. Oh, sorry, wrong one. In the 93% area, now we're at 92.90 in the Dow, and break down unless there's this thing called a double camel hump. It's a stochastic that makes a very big arch formation, fails, and then comes back, and then it only hangs around above 80% for a very brief time, usually no more than 5 to 6 sessions, and then it goes under the 9-period exponential moving average. Sorry, it goes underneath the 80% level at the same time as it goes underneath the 9-period exponential moving average. So the day is younger, up 19 now in the Dow. Remember, just now we're up 63. So this is quite a bit of a pullback. The NASDAQ is also dragging us down. Maybe I was a little bit too carried away with the positives. We'll see. In fact, I did raise the stop because of what I put in this morning. So the stop will be even tighter for that position that we took in the long Dow. But now what's really important about this is that the stochastic is still acting very well. The relative strength is pulling back. On balance, volume is pulling back. But that fast-moving average, I'm still looking at it and I'm saying I'm seeing residual strength. And it's being dragged by the others, dragged down. And that can happen. It's only 30 stocks, 500 stocks, 2,000 stocks. They can drag. So now let's do this very quickly. 2 charts in the den. Question. How did I get 2 charts in the den? I'm not sure. All right. I don't see your cursor there. Yeah, these are my charts. Just to mind you, I just wanted to clarify. These are my charts right here, and that's what I'm staying with. So in the meantime, what are we looking at? We're looking at a peak F in the 120-minute chart in the 120-minute chart of the Dow, and there was a nice bounce to an A. But if that A fails, you'll know that it's failed because the Dow will go minus, and then it'll suddenly start to go minus 20 as the S&P goes about minus $1.50. So, as far as I'm concerned, let's just look at one of the factors that I consider to be very important. What is that? It is the Dow Quartet, Chapman Wave Dow Quartet Index, made up of GE trading down 4 cents at 27.45, having made peak D, and leg E in the weekly, leg E in the monthly, possibly a peak E in the monthly. I'm going to be watching this really closely over the next 2 days. Why? Because there's a chance that we've just seen a peak E in monthly charts. I don't want to mess that up. Look, UTX, my pilot light stock, is trading right now up 70 cents. It made a peak B. Yep, there's an alternate count. I don't know what that alternate count is. Can it be 106.02, 105? No, this has to be brand new. Leg A, leg B, peak B. I've still got strength in this UTX chart. Leg D, doji in the weekly. Leg E, possibly a peak E if it's this month in the monthly chart. Triple M is trading down just a tad, minus 0.01 at 138.12. Had a bit of a pullback yesterday at peak D. Leg F possibly in the weekly. Leg E, maybe a peak E in the monthly. Gonna have to put this together very neatly over the weekend and see what happens. And here's your IBM. IBM is holding very well, up 57 cents. So that's what I was talking about, residual strength. And the only reason why I felt that instead of going on the short side, which seemed a very obvious thing, that residual strength is what I wanted to look at. So that's how it stands, 93% for IBM in the stochastic. UTX, stochastic daily, 92%. Triple M, stochastic, 93%. I don't remember ever seeing this before and then calling a top. So I'm going to do this because there might be a little problem here with my charts. I'll be right back straight after this, and we'll review some of these charts in case it wasn't coming out live.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back. So let's just do a couple of things here. So those the four stocks that I was looking at, they're holding up really well. And the strength that we're looking at in the Dow, United Health, Merck, Johnson & Johnson, JP Morgan, UTX, Goldman Sachs, Boeing, DuPont, they're all up, IBM. So McDonald's, there's rotational strength, and that's kind of important to be looking at. So I don't know yet whether I want to start that big short, the short side that I was looking at. Just looking at the SCO, which is the ProShares Ultra Short, Dow Jones AIG crude oil, made a peak D, it's pulled back, holding the 9 period moving average. And the stochastic, everything about this so far is saying, hey, watch it, because it could retest the highs. That means that crude oil is going to pull back. Now, what's very interesting is that you would have to see the SCO break under 34, I'd say close under 34 for 2 out of 3 bars, and then start to make the 9-period moving average resistance to start seeing a decent bounce in crude oil. So let me just, I want to get that out the way. A couple of things that I want you to quickly look at, and this is what I'm going to be spending a lot of time on. First of all those Investors Business Daily stocks, I'm going to be looking at them really closely over the weekend. That's number one. Number two is crude oil coming down. You have to think of it as a tax. It's really a benefit to us. It's like getting a better rate. So I'm going to be watching that closely. I'm looking at the TLT. TLT hasn't... It's holding, but it hasn't really budged. If the TLT at any point in the next 2 weeks breaks above 104.65, it's at 101.92. That shouldn't be a big deal. It's just it was there recently. If it can do that, then I'm going to be looking at this as a successful arch formation that's trying to copy what we saw the gold chart do. And the gold chart, by the end of the day, or certainly by Monday, I want to see the gold above. This is the contract itself. I want to see it in the 1250s. If it's at 1235, if it starts trading in the 1250s, that's a very successful test of the H pattern. But my monthly chart is still very negative. That doesn't mean to say you couldn't have a fabulous bounce of 6 weeks or more. So that's how we're going to leave it over there. Let me just give you down numbers to be looking at right now as we wrap up. Everybody have a wonderful weekend, and stay tuned for you've got Paige and Nico coming up, and then you've got all these wonderful shows here at TFNN for the rest of the day. I'm going to be watching real closely. If the Dow closes on the very near term, and it's at 16,452, a close below 16,290 says to me, watch out. You have begun some kind of a consolidation which could turn into a weekly one if there's a peak D. And then you're going to be watching the monthly. I am expecting in this first quarter, sometime in this January period, I don't know if it started or not, that's the big thing, that there will be a pullback, and a pretty darn sharp pullback, and then a whopping move to the upside. That's my scenario. How we play it is going to be very interesting. So I don't even hear the music, but I want you to just get that out to say that's the level of the Dow. On the upside, all I'm anticipating is a move that's slightly above 16,588.25 into the up channel once more of the weekly chart and a leg D. And then you got to start being very, very careful. That's just everything's pointing towards that. And as far as the volatility index is concerned, remember I've used this for years here at TFNN, out there in the public, just made it a very open thing. In the teens, especially in the lower teens, that's buying pressure. The moment that this index, the volatility index, starts to go into the 1570 to the 1630 area, watch out, because it could start to test 1675, the previous high that was on December the 18th. And believe me, if this volatility index starts to move towards the 19s, this market is coming down, and it's going to come down quite hard. So that's my scenario. Don't forget my opening call. Right there, front page of TFNN. You can check it out for 2 weeks free. And just have a great weekend, everyone. And be safe with all this snow and everything up here in the Northeast. See you again on Monday.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.